What's going on, guys? In today's video we'll be doing my weekly trading 212 portfolio update, and this will be week 13. So there hasn't been much trading on my part this week due to being quite hectic in work, but today we'll be firstly looking at any dividends that were paid this week. We will have a look at all 12 of my portfolio sector pies to see how each is performing this week also. We will then look at trading's 212 hot list for this week in terms of top risers and top fallers, and at the end of the video I want to discuss 4 plans that I'm going to definitely think about over the weekend in terms of my trading 212 investing future. But just before we get into all that, as always, if you're new around here, please consider smashing that subscribe button, as we're currently on 518 subscribers and we were hoping to get to 600 by the end of this year. And with all that being said, let's dive right onto this week's trading 212 portfolio update. Firstly, let's have a quick look at dividends this week. We only got the one dividend in the form of Johnson & Johnson, which was €2.02. And because we have the auto reinvest feature on this pie, on my healthcare sector pie, that €2.02 automatically auto invested back in to my 5 companies in the healthcare pie. So you can see here that we've put in just under 50 cents extra into each of these companies: AbbVie, Abbott Laboratories, Stryker, Johnson & Johnson and Pfizer. With week beginning 13, we have currently €5,132 invested in my trading 212 account. That equates to about $6,200, and for my UK viewers it's about £4,660. There hasn't been much trading on my part this week, probably first of all due to having a hectic week outside of trading due to work commitments, and probably second of all is because I am accumulating up about €1,000 in capital to kind of invest into my dollar cost averaging in terms of companies that are under my 3% threshold. And there is, and we will see in today's video, that there is quite a few companies that might be already in this threshold that I could take advantage of, but I'm going to wait until next week to start dollar cost averaging, because I want to go through 4 points at the end of this video in terms of my plans going forward in terms of trading. So I need to think about it over the weekend, and again later on we'll go through that. But I believe I need to kind of sit down and really see where I want to have my investments in the future. And again, we'll just go into that later on in the video. We'll just do we'll do the 12 pies and see how each is performing. So as it stands, we are currently up about €403 or 8.5%. For my American viewers, that's about $490 or so. And for people watching from the UK, that currently is about £365. Our second pie is consumer discretionary. We're currently up 10.5% here, or €390. 5 positions, Tesla is currently up 53.5%, again is our biggest position so far in terms of an increase. McDonald's is currently down 6.3%, and again, because McDonald's is such a blue chip, well-known company that again will always bounce back, I will certainly be dollar cost averaging in here next week, and I already mentioned this last week as well. But again, as you know, I haven't done any investing this week. Target is currently down 4.5%. Again, we only have €10 or €9.50 here. So again, there's plenty of room to dollar cost average in this one. Starbucks is up 2% and Nike is currently up 2.3%. Third pie is consumer staples. We are up just under 3% and we have €226 invested. Coca-Cola is up 6.7%. PepsiCo is up 6.5%. P&G is down 3.65%. Another company that I'll certainly be looking at the dollar cost average. Beyond Meat is down 1.78. Again, we only have the €10 here. And Walmart is down 3.65, and yet again under €10 invested. So you'll probably see throughout this video that a lot of the companies, or the majority of them should I say, that are actually in the red, or in terms of they're down 3 or more percent, would be the companies that I've only had one initial investment in. And you can see we only have about €10 in each of these companies. So over time, once I actually do dollar cost average into these companies and get my average price down, I believe these kind of reds and over 3% will certainly be gone. We then have my energy sector pie, which is up 22%, and we just have under €200 invested here. We have the two kind of old school style energy companies in the form of ExxonMobil and Chevron. ExxonMobil is up 23.7% and Chevron is up 23%. And then we have the kind of iShares Global Clean Energy ETF, which incorporates all the new renewable sources of energy, and that is currently up just over 5%. My ETF pie is up next. We have just over €600 invested, and we're up over 10%. 2 holdings here: Vanguard S&P 500, which is up 9.92%, and the Vanguard FTSE 100 GBP is currently up 14.5%. Financials, I believe, is my second biggest holding. We have 5 positions here again. We're up 12.69% and we have €735 invested. For all the 5 holdings are in the green. We have Visa up 4.3, MasterCard is up 2.4, JP Morgan Chase is up just under 23%, 17.28% is Bank of America, and Goldman Sachs is currently up 20.6%. Healthcare is up next. We have €640 invested and are up just over 10%. 5 holdings here. Johnson & Johnson is up 3.87%. AbbVie is up just under 25%. Pfizer is up 11.7%. Abbott Laboratories, again, one of the companies that I've only had one holding in at the moment, is down 2.76%. So again, as it's only about €10, even if I invested, let's say, another €20, that would go into the green regardless because of dollar cost averaging. And Stryker is at break even. Industrials, we have €233 invested and are up 6.17% overall. 3M is up 5.6%, Caterpillar is up over 20%, Waste Management is up just under 3%, Boeing is up 7.33%, and FedEx, again, as I've stated already, is only €10 invested, is down pretty much, is at break even, is down about 7 cents. 2 of the portfolio pies that I'll be mentioning at the end of this video are the materials and real estate. Materials is currently down 10.98%. We have 5 holdings here. Air Products and Chemicals down 1.9%. Ecolab is up 5%. Nucor is up 5.4%. Barick Gold again is still pretty much staying where it is at down 14.7%. And that again is due to their corruption claims and also the drop in the price of gold. And again, as I always say, gold is cyclical, so it will come back up in price. But also, if I dollar cost averaged here, this is certainly one of the companies I'll be taking advantage of. And then we have BHP Group, which is up 15.5%. Real estate is down 1%. We have 5 positions here again. Realty income is down 0.0 or 0.19%. American Tower is down 9%. Stag is a break even. Well Tower is down 1.36%, and Essex Property Trust is down 3.39%. And yet again, without failing to repeat myself, the 4 companies here all only have one holding or one position bought in. So again, even if I double this position and add a €10 more here, that would drastically increase these negative amounts. The tech sector is next. My largest holding in terms of value, it is currently at €1,084. We're up 7.34%. We have Microsoft up 0.8%. Amazon is down 0.34%. Apple is up 8.7%. Alphabet is up 20.5%, and IBM is up 0.5%. And finally, another company sector pie that I'm going to be mentioning later on in this video is my utility sectors. We're currently down 3.7%, but again, it's my smallest overall pie with just over €50 invested. So again, that's quite nothing in terms of my overall balance. Consolidated Edison is down 5.8%. Next Air is down 4.6%. Atmos is up 0.6%. Broker Infrastructure, or Brookfield Infrastructure should I say, is down 1.18%, and American Waterworks is down 7%. And again, only one holding here at the moment, so even if I double these, that would probably even cut my loss in half here. Next up, let's look at this week's Trading 212 hot list. Let's have a quick look through the leaderboard overall. We'll have a quick look at the top risers and top fallers. So in the overall leaderboard, in terms of Trading 212 accounts holding these positions, Tesla is in top position with 118,700 accounts holding this company. We then have Apple, Amazon, Neo, and BP making up the top 5. In terms of top risers over the last 7 days, if we scroll down here, we can see that DoorDash makes up the top holding in terms of 7,500 new accounts adding this to their position. We then have Tesla, we have Foley Acquisition, General Electric, and Healthcare Choice Management. In terms of fallers, the leaderboard that no one wants to be top of, Sunnydale Growers is currently the top company here with 7.1% change, or 623 people removing this from their position. We then have Our Risk Medical, Tom Taylor Holding, Slack, and Under Armour making up the top 5 fallers. So this then leads me on to probably the most important part of the video in terms of my future investing. So I just kind of jotted down 4 points last night when thinking this through that I'm going to consider over the weekend in terms of my future investing. So we have 4 bullet points here, as you can see. We can see the top one says reduce my portfolio numbers. So at the moment we have about 53 or so companies, and that's due to having about 12 or 5 or so companies in each of my 12 portfolio pies. Again, I wanted to have my full diversification, and that kind of comes at costs also, because you can see I even hold ETFs that track the top 500 companies in the US and the top 100 in the UK. So you'd wonder, for example, is there any need to hold some of the positions in, let's say, my utilities, real estate, or material sector pies? Because again, some of those companies, I'd be the first to admit that you wouldn't know a whole lot about. In terms of, let's say, Consolidated Edison, I'd know a whole lot more about Coca-Cola or Apple, let's say, in terms of what the company actually does and their overall kind of P&L and balance sheets, let's say, in comparison to Consolidated Edison and those kind of companies. So you would wonder, and again, this is kind of me just thinking out loud, but you'd wonder, would you be better off kind of reducing my stocks and having, let's say, 20 companies that I kind of know inside out? Because let's be honest, no one knows 50 to 60 companies inside out unless you're really like the full time kind of portfolio manager, which I'm clearly not. So I'd wonder, am I better off, let's say, having 20 or so companies overall in my portfolio and having a lot larger sums in each of these positions? So that's kind of the first point I want to think about over the weekend. The second point I want to talk about or think about over the weekend is swing trading. So originally, when I started trading, I wanted to kind of get into swing trading, as I believe I'd have a lot more time, as in I wouldn't have all day to day trade, let's say, because of my 9 to 5 job. But again, I find that, let's say, the investing I'm doing at the moment might seem a bit passive or too passive as such. And I believe, so for example, if we are at week 13 and we're about 8.5%, I'd wonder, would I be able to make more money swing trading over those 13 weeks by just scalping and taking 2 to 3% profits off some well-known companies. Now, I've thought about this a lot in the past, and my kind of plan originally was to pick, let's say, 10 well-known companies across the board, like in different sectors, etc., and then kind of study these companies inside out in terms of charts, etc. And anytime there's a drop or a fall, kind of buy in and then wait. Is literally to sit and hold kind of exercise. And I know that sounds a lot easier than what it actually is, but I was thinking kind of getting 10 companies, learning them inside out in terms of every single aspect of the company, and being that would kind of help give me some slight advantage in terms of just picking any random companies to swing trade. And again, without rambling on, that will just be my thought process behind this. And again, I'll give a much more clarified video next week in terms of what I actually end up doing with all 4 of these thoughts. So next up, the third thought was to have 2 portfolios, which I think I had originally, kind of a dividend style portfolio and a growth portfolio, and kind of have them separate instead of having 12 separate portfolio pies, just to have 2 pies and have 1 dividend, 1 growth. And then my fourth option was to carry on the way I'm going in terms of dollar cost averaging, and that is working. So one would say, why would I actually stop doing this? But again, I believe that, let's say, up 8.5% in 13 weeks is definitely better than being up 7% or even being in the red, for example. But I feel that swing trading could, or even, for example, if I start investing in more risky companies, I don't mean extremely penny stocks or anything like that, but I mean I am playing it very safe in terms of having 50 plus companies. And again, because I'm quite young in terms of investing, I believe that I would be able to take a bit more of a risk in terms of, let's say, if I was 50 or 60 or even 30 or 40 for that example. And then, so dollar cost averaging, that's kind of the reason why I held off dollar cost averaging this week, because I wanted to make up my mind over the weekend first in terms of what I'm doing with each of these 4 points. And if I do decide to pick the bottom one here, which I could very well do so, then I'm going to certainly start pumping in money into the companies that are currently in the red. And again, that could make a big difference to my profit and loss in the long term. But as I said anyway, I'll just give it the weekend, and I'm going to sit down properly with a pen and paper and go through each of these 4 points and kind of give the pros and cons, and I'll give you an update next week on that. So kind of all that being said, that brings the end to this week's week 13 portfolio update. We are currently up 8.5% and have €5,130 invested in my trading 2 and 2 portfolio. So today we went through, first of all, dividends paid this week. We went through my 12 portfolio pies to see how each is performing. We then had a look at the trading 2 and 2 hot list leaderboards. And finally, we went through my 4 points that I'm going to look over the weekend in terms of my investing and trading 2 and 2 going forward. So thanks very much, guys, and I'll see y'all in the next video.